Hi everyone, welcome back to Be Rich. I read an interesting comment from someone called Andrew I3I. He said, "Bro, are you really serious about your content? I'm here to listen about Cisco. I'm not here to listen to someone else ask dividend, not credit. Comment, take it seriously. Out 16 minutes Q&A session is 12 minutes. If you don't have enough content for 15-minute video, please do two companies. You have your Q&A sessions separately. People asking their question can watch those videos for answers. We're not here to listen. I'm here for pure financial content on Cisco. Please don't do this. Keep a separate session for answering those questions." Well, I'm sorry, Andrew, that I've offended you so much. But the point is, in the beginning of every class, the teacher will ask, "Hey, any doubts on what we have done so far?" And people might have some doubts, and we answer those questions before we get into the next bit. So anyway, since you are finding it very difficult to fast forward and come to the point of the video which you want, and you're finding it difficult, Andrew, I will do what from now on, I'll take this whole Q&A bit and throw it at the end of the video. So I'll do my regular part, and if you wish so, Andrew, you can get up from the class and leave and say the rest of this is just BS and not waste your time because you're so knowledgeable, and let the rest of us have the question and answer. So those of you who don't wish to listen to the questions and answer can definitely stop watching the video at that point of time. So today I want to talk about Berkshire Hathaway and what is wrong with Berkshire Hathaway. Is there something wrong, or there's nothing wrong? Is there an opportunity? Warren Buffett, we talk about him a lot on this channel, this platform. My brother talks about him a lot. But he is, in the last annual meeting, he did say he's stepping down and he's going to be handing over the mantle to Greg Abel, and there won't be any more Buffett. It is an end of an era, as they say. But what has led to this is its Berkshire Hathaway stock has been falling. And not by little, it's been falling by quite a bit. And they're saying the Buffett premium, as it's commonly known in investing circles, is disappearing. So this has left open many questions, and I thought we'll dive into that. And then towards the end, I'll talk about your questions on the ETFs and FCNRs and the NREFDs. So anyway, let's dive into this. So what's happened? The Class B shares of Berkshire Hathaway year to date has fallen by 11%. And now it's underperforming the S&P 500, which is up 15%. So that is like a huge gap which is formed. And usually this is not the case. Usually Berkshire Hathaway will be outperforming the S&P 500, and we will be looking at this. So why has this happened? Reason one, the slowing of buybacks. They have a lot of cash sitting on their table. Usually what Berkshire Hathaway does is, instead of offering dividends, what they do is they offer to buy back the shares, and investors can, sell the shares to Berkshire Hathaway and get paid. So you get capital appreciation. Let's say you bought it at 200, it's gone up to 400. You can sell some of your shares at 400, so-called book your profits from Berkshire Hathaway, and take that. So that has been slowing down buybacks. The other is 40% of its portfolio is sitting in Apple stock. That has corrected. Apple stocks have been correcting for various reasons. You can talk about Apple intelligence, you can talk about whatever reasons you have. The whole tariff situation and the China and the India production. Apple has a lot of problems. So Apple stock has been correcting. So that has led to further correction in Berkshire Hathaway, who have a huge stake in Apple. And of course, there's a lot of questions about the next leadership coming in. And, Greg Abel, will he be able to handle this? What Buffett was doing, because there's no more Buffett anymore. There's no more Buffett annual meetings anymore. So is the Buffett magic disappearing? And what is this Buffett premium everyone talks about? Buffett premium is nothing but investors, they're willing to pay a special extra price more for the Berkshire Hathaway stock because Buffett is running the show and he has a proven track record. It's a certain magic he has. This was true with Steve Jobs and Apple. When Steve Jobs disappeared and Apple went through this. Heck, it's even true with his own platform. My channel here, MoneyPechu channel, we have an Anand magic happening, Anand Srinivasan magic happening. Every time he appears on the channel or appears on the video, that gets a certain boost. And whatever Anand says has a certain ring to it. Even people who ask questions and I answer it, and I do have meetups, they'll always say, can Anand say this? I understand this. Because, Anand has a certain touch, Anand has a certain magic, he has a proven track record. So if Anand says it, it's more believable. I get that. So is this succession plan which Buffett has said? Who is this Greg Abel? Well, he's a very competent guy, and Warren Buffett has a lot of faith in him. That's why he's put him in. But he's not been as visible as Buffett, and investors don't know him. So this has been an issue. Then the other guy, Ajit Jain, who's taking care of the insurance, he's another brilliant guy, but he's not front-facing again. So the market has not felt inspired in confidence because there's not someone like Buffett sitting there. Same thing here. Behind MoneyPechu, we have Albin, we have Trader, we have Sheikh, and we have a whole bunch of team guys. It's not just Anand here. There's a whole bunch of guys working here. But Anand is the front face. He's the guy who's started it all, and he's the one who inspires confidence to all of you watching the video. Same way Buffett was the guy who started all of it. His story is a story which has been weaved into Berkshire Hathaway. It is his kingdom. He's been ruling it. Now that he's stepping down, the next guy's story we don't know. So what's his background? Was he like Buffett? Did he have is this story as inspiring as Buffett? Is there a folklore about him? Is he the wizard of wherever he comes from? These questions are left open to investors and Mr. Market, and for that reason alone, they seem to be pushing the stock down because he's not there and there's a question being asked. So should you worry if you own Berkshire Hathaway and you've seen this 11% correction and you've seen a 15% rise in S&P 500? Should you say, oh my God, maybe it'll go sliding further down, maybe I should exit? Should you worry? Or if you have been waiting to buy and you think this is a great opportunity, should you buy? Well, if you are a Buffett cult person, then yeah, you should be worried, I guess, because you're not buying a company on its papers. You're buying it because you having an admiration for Mr. Buffett, Warren Buffett, and you're buying it for the cult status. Then yeah, he's not going to be there anymore, so you can't claim that anymore. It's like your favorite lead singer in the band has quit the band. Do you continue buying their records? Is a big question. A lot of music fans have. It's happened through history. It happened with Van Halen when David Lee Roth left, and a lot of fans were left cut. There are two camps formed, with David Lee Roth side and the Van Halen side. And me being a Van Halen fan, I don't know. I'm more on the Van Halen side more than David Lee Roth. I'm sure David Lee Roth fans would feel upset. Anyway, that's not this video about. Of course, before Andrew gets upset and says, why are you talking about bands? Bands from your time. You're an old man. I'm sorry, Andrew. I was just trying to highlight an example so people can understand. If you are that kind of a person, then Berkshire Hathaway would not be a stock you will be considering anymore because Buffett is not there anymore. But if you believe in Buffett's principles, you believe in Charlie Munger's principle, you believe in Ben Graham's principle, heck, even if you believe in Anand's principle, then you have a great opportunity. You have a company which is cash rich in the balance sheet. It's got a lot of cash. It's under leveraged subsidiaries. That means the subsidiaries of Berkshire Hathaway have no debt, and it has a very conservative insurance float, and it's compounding. So if you look at all that, you're doing great. Yes, the magic of Buffett may be gone, but you still have, if you look at it as a regular stock, a regular company, still an amazing company to own, and that I think is worth it. You will have to wait and watch when the new leadership comes and see how things go, how the management goes. Yes, it is a big question being left on the table, but from the position where they're sitting on, I think it's worth, looking at it. I don't think there's anything wrong with Berkshire Hathaway as such. And this 11% correction, if you do own it, I understand feeling the pain of it, but I don't think Berkshire Hathaway has anything to worry about, or the shareholders of Berkshire Hathaway have anything to worry about in the long term. Things are fine and dandy. If there's any reason to worry, I'll definitely ring the bell here saying, oh my God, Buffett wouldn't have done this. Till that point of time, I would say don't worry. Now getting to the Q&A. People like Andrew who had your fill may vacate the classroom. And those of you who have some questions which you'd like me to answer, which you dropped in the comments about T-bills, ETFs and FCNRs and NRE bond FDs, I'll answer these questions now. So, first question was asked by Muthu Sekar. Okay, he says, isn't FCNR USD at 5.8 a better deal? Yes, if you are an NRI and you want US dollar safety with no currency conversion risk, you're absolutely right. But there's no capital appreciation, it is a fixed tenor with no liquidity, and you have to think about that. But it's great for safety seekers, no questions asked. But if you're looking for liquidity, then I would ask you to consider T-bills instead, because these are all short-term T-bills, and if you exit, you know, these FNRC, I have to check how it is for exiting, but these are highly liquid, the T-bills I'm talking about. So the market corrects and there's an opportunity opening in the market, it is easy to move into them. So that is the main reason I'm talking about that. Shankar is asking, I get 7% in my NRE FD, why choose 4% ETF? NRE FD is in rupee denomination, even if it's tax free, while T-bills are in US denomination. So you're protecting your buying power in dollar terms, because Indian rupee depreciates against the dollar 2 to 3% annually in an average. And if you look at it, 4.5% in USD to 7% in INR, kind of after foreign exchange adjustment. So I don't know. I would, if you are looking at American market and you're planning to invest further in the American market, I would say the T-bills make sense. The ETF, like I said, gives you the liquidity when and if and when, not if, it is more a question of when the market corrects, you will have an opportunity to quickly move in and buy. So that is my reaction to that. But hey, the choice is completely yours, because I do not know what your goals are and what your plans are. Like I was saying, in Instagram today, about the post about motivational post was all about that your investment plan should align with your goal and not your ego. Don't get your ego come in the way of your plans and your investments. It'll be a mess. Keep a goal and then make a plan and then make sure you're investing towards that. These are only instruments, these are only options. You have to choose what best aligns for you. Chitranjan Sarvanesan 5714. Real return including depreciation. Yeah, okay. Historically, like I said, depreciates 2 to 4% the INR to the USD. So I would say 5% in USD is equal to around 8% in INR. So for every 10,000 rupees you convert it, you can do the math. But more than this outlook of conversion comparing INR to USD, if you are already in USD, then keeping the liquidity in USD makes sense, like I said, in T-bills. If you are in INR and you're converting to invest in the American market, there's no need to take your INR and convert it into USD and then put it into T-bills. If that's what you're asking, then I would say continue staying in INR. How is the yield distributed in T-bills and ETFs? T-bill ETFs like SGOV or BILs or iShares 3-month treasury accrue interest in the NAV, not the monthly payouts. So the NAV is where it goes into. So some version offer monthly distributions depending on the share classes. So what you get the benefit is your NAV in the ETF is appreciating and selling instead of getting your yield in hand. So it depends where you are in terms of sitting for your capital gains and tax. You'll have to check all that out too. What is the risk on T-bills ETF? It is low. I won't say it's zero. Okay, your dips NAV can take a dip in market volatility, but in terms of inflation can erode your returns in the short term. But I would say it's safer than any long duration bonds, and if you want to keep it liquid, this is the best way to park some money and to allow it to compound a little bit while you're waiting for a market opportunity. T-bills and all this, what I'm saying, these strategies are meant for holding short-term lump sums. So when the market corrects in the US, you can look at investing. So it is mainly US specific what I'm talking about. It is not India specific. So keep that in mind. What about long-term investors? JS Rajan is asking, well, if you're a long-term investor, you don't have to worry about all this. You just have to pick the right stock at the right price, keep buying and compounding, and you should do fine. So anyway, these are some of the questions you had. Put your other questions and comments down below. Like I told Andrew, I will do the company analysis, stock analysis, macro analysis first. Then in the second half of the video, I'll answer the comments. So those of you who are finding it boring and cumbersome can switch off the video as soon as you finish what you need to hear and move on. And those of you who need some questions answered which you asked can hang about and see if I get down to your question. I hope you found that Berkshire Hathaway video informative and entertaining. It is relevant because this happens every time an icon of a company disappears. It offers an opportunity for investors to pick it up at a lower price. But if Berkshire Hathaway is at the right price, after 11% year-to-date correction is something you will have to think about and analyze, and I'll have to sit and watch you analyze. And I hope the rest of the questions about the FCNR and T-bill ETFs and the NREFDs were sufficient. If you have any more questions, definitely reach out to me or my team and we'll be more than happy to help you guys out. We have offices in Dubai, able to help you out with any questions you have outside India. Anyway, thanks for watching the video as always. It was great to catch up with you guys, and nothing else more to say. And wherever you are, in which part of the world you are, and whatever time you're watching, I wish you the best. For those of you who are in India, I wish you a great evening, and I'll see you tomorrow, where we'll pick up on some company news, I'm sure. Thank you for watching the video today.